into conversation with the management of Alembic Pharma. Before we do that, just want to mark the flash on the bottom of the screen. Adani Enterprises numbers are out, and the initial flash is that they are going to be raising funds worth up to 25,000 crore rupees via a rights issue. So that's the first update coming in. But the management of Alembic Pharma, let's get into conversation with Mr. Krishnan G, the CFO. And hi, good afternoon, and thanks so much for your time. Let's first talk about your earnings. Strong set of numbers coming in. Margins are looking good. Your overall profitability has also seen a 20% uptick on a year-on-year basis. If you could help us understand the tailwinds that you've seen this quarter and if this growth is sustainable.
Hi, good afternoon. Thank you for having me on this call. So the quarter two growth is well broad-based, and we have seen growth coming from all parts of the business. India business grew at about 5%. The US business grew at about 21%. ROW business grew at about 32%. So we have seen good, solid performance coming across different parts of the business. And most of this growth, we're happy to see that the growth is coming from higher volumes as well as new product launches that we have seen in the US, and that's supporting the growth. We expect the growth to continue into the second half of the financial year, and we expect the full year to be landing somewhere in the mid-teens kind of growth, low double-digit to mid-teen kind of growth in the full year. And yeah.
US generic business, you said it grew at healthy rate. Do you expect that growth to be maintained given the kind of trade trade negotiations which are going on? I know it's under exemption category at the moment, but what are your clients telling you at this point in time?
So we are seeing good positive momentum on volumes that for the products that we are having in the market, and the new launches are also supporting, and we're also seeing a good improvement in B2B volumes on API. So we expect this trajectory to continue. And as far as the tariff is concerned, while it's currently exempt for generics, we are quite watchful on how that is going to play out after some of the actions that's underway in US. So we'll watch out for that. But I think at this point of time, if we look at the trajectory we have had in the past on volumes on existing products, we expect that to continue.
Within the domestic market, what kind of growth are you looking at? Anti-infectives and gynecology, which are some of the biggest segments for you?
So in the domestic segment, we had good growth coming from the acute segment for the quarter, and we also saw resilient performance in the chronic segment, and it was all supported by good product launches in the current quarter, and we expect also new products to support the growth in the near future. Apart from that, we've also looked at operating effectiveness across the business in the domestic side, where we have strengthened the field force with a lot of digital initiatives, which helps us track the performance, and several other operational initiatives, which helps us to improve the field productivity. I think that should support the growth in the second half as well, in line with the market.
Okay, and if you could help us understand what the new launch pipeline looks like for the rest of the year, anything in the works right now, or any ANDAs that you are currently waiting for?
So we did have ANDA filings in the US, and our product pipeline looks good, and we expect the filings to continue into the second half of the year as well. And in the first half, we launched about half a dozen products in the US, and we expect similar sort of launches to happen in the second half as well. And like I said, the growth in US is supported from two aspects. One is about the volume growth on existing products and as well as the new products. Second, the second quarter we had good support from new launches that we had, and we hope that will continue into the second half as well.
And how do you see your R&D expenses going forward?
The R&D expenses were close to about 10% for quarter two, and it's somewhat similar to what we have seen in the past, and I think we will maintain it at that level considering the pipeline we are working through, and also the balancing of pipeline that we're doing across different modalities around beyond oral dosage. So we have invested in peptides as well as injectables. So that should support the future launches beyond the current year.
Which are expected to come in the next quarter or two?
So the R&D spend will continue to remain at similar levels for the next quarter.
New products which you may be launching in the current quarter in Q3 or Q4?
Yeah, so like I said, we had about half a dozen launches in the first half. So we expect the launches to be at similar levels into the second half, maybe slightly higher, and that should support the growth. And typically, you wouldn't see growth coming all of in one quarter as an impact. So it should phase out over a period of time, and that's what we expect to support the growth in the second half as well as into the next year.
Okay, and your gross margin guidance that you had spoken to us last time when we interacted between 70 and 75%, is that still intact?
It is, and quarter two we were intact in that range. I think we were about 74%, and we continue to hold on to that where we're comfortable in the range of 70 to 75% in the second half as well.
Okay, Krishnan, on that note, we'll let you go. Thanks once again and congratulations on a very strong quarter. We hope to interact with you next time as well.
Thank you so much.
Okay.